stock specific, we can always find, some trading ideas and how to, negotiate such volatile markets. C.K. Narayan, Manas Jaiswal and C.A. Rudramurthy now joins us to show, some direction that how we should negotiate this volatile market. Dr. Narayan, I'll come to you first. A word on how markets are shaping up, not too lengthy, sir. And your calls, you are suggesting to sell C8 tires and buy JSW Steel.
Good morning, everybody. Well, the overnight activity seems to have shaken up a lot of people who were, just about getting ready to get back into the market. And it was even being feared that one might have missed the chance in buying the bottom. So, well, for all those people, here's the market giving you one more chance. But the real question is, are you now prepared to buy? This is typically what happens is when the market is going up, we always want to buy the dips. And when the dips are occurring, we are never finding the courage to do so. Now, looking at it technically, we did have all the hallmarks or most of the characteristics that were required for making a bottom when it hit down to that 10,300 levels earlier in the week. And what we are probably seeing today could well be thought of, at least for now, as a retest of the low. So therefore, you might dip down to those levels again near 10,300, 350. Maybe penetrate that a bit to create my panic. But what I would be watching for is the kind of breadth, the kind of leadership on the decline. And if that were to be missing, then I would definitely conclude this to be a retest. Now, all this remains to be seen during the trading of today. So it's not necessary to pronounce a trend or what lies ahead right in the morning of an important day. I think it's more vital or more important to know, let's say, the road signs that we can set up to really understand how things are happening. So, like I said, leadership, the extent of movement down, to the downside, the kind of breadth we have, the kind of selling which emerges, whether it is in mid caps or large caps, etc. So there are a lot of road posts. I think I would like to watch that before coming to any longer term conclusion. At the moment, I would say this is a retest of the prior bottom. Coming to the individual stocks, we are mixing it up. JSW Steel is on a very good uptrend. It's in the news continually because of its intent to take over so many businesses. So I think that will keep it in play. It might start off a little soft. So if you get somewhere between 297 and 300, it would still be a buy for me. And you can adjust the stop losses and targets suitably there, if it happens. C8 is a sell because tires rallied up, but I think 2 days when C8 rallied, it did meet with selling.
Right. Manas, you are selling, mid-cap names. Adani Ports is a sell and Bank of India is also sell for you.
Siddharth, Adani Port, even yesterday I mentioned about Adani Port because it is not breaching its 50-day moving average. It is facing a lot of resistance over there. And now, since yesterday it broke its 100-day moving average, I think it can again test its recent bottom. So I think you can set the target of around 392, take a short call and keep the stop loss above 412. Secondly, the sell call on Bank of India because here I think you may see some more weakness in PSU banking stocks. Bank of India is clearly making lower tops and lower bottoms. It is trading below its 200-day moving average. So I think here you can set the target of around 134, take a short call and keep the stop loss above 146.
Well, my research colleagues are, suggesting that, or they are indicating that the Shanghai Composite is down by 5%. So that is an important note to our viewers that Asian markets are cracking and big time. We can also, go to now C.A. Rudramurthy. Hi, welcome to ET Now. You are also suggesting to short Adani Ports, and Dish TV is a shorting candidate for you. Though in FNO yesterday we saw some formation of long positions.
See, first of all, if I have to look at overall market, for sure, today I will make a statement, men's are separated from boys. There are many analysts, many fundamental, many technical guys who have been calling the market up and down. But more than stock picking, there are three important points what people have to remember in this market. It is not what to buy and what to sell, but there is something else which everyone has to understand. First point, people have to understand this is not the time to take leverage. people have to understand leverage has to be taken at right times in market, especially traders. So I have been advising my clients and people who follow me even in social media not to take leverage. We have to take leverage on the buy side when panic comes, not when market is riding on the upside. The second point is this is definitely a time to switch from junk stocks, to switch from stocks where you just wanted to buy for 10-20% up move, to quality stocks, to quality businesses. So second point, people have to understand you have to switch from junk to quality. And third most important point, you have to have enough capacity to buy in these type of dips for an investment purpose, not for trading. So these things have been very, very important in this market. And yesterday I gave a comment to everyone saying that use this bounce in market to exit junk and even trading longs and stay with quality. So when it comes to Dish TV, especially, there have been a lot of people buying this stock, but
Put it
still
straight down.
stock looks very weak. For me, on futures, Dish TV is a...
Okay. Let me very quickly bring Sandeep Sabharwal also on board. And Sandeep, we've been talking about this kind of a pattern, I think, from Monday itself, that first you will see a big cut, then some dead cat bounce, and then reversal of that. But is today a day you would say that a fundamental investor should be buying fear, or the time to protect capital is still on? I don't think there is too much of cash which individual investors have, Sandeep, but whatever cash is left, is it time to safeguard that cash or time to buy now?
I think what one should have done is like what I talked of is that we deployed half the cash over the last few days, last couple of days as the correction played out. Now we'll wait for around 10,000 levels of the Nifty if it comes, and if that level comes, then I'll be going ahead and deploying rest of the cash, and that should be the strategy, because the second dip should typically be lower and make a lower bottom than the first dip. That's how I see the corrective moves normally in a bull market playing out, and that could happen. Today looks unlikely. I don't think it will fall 500-600 points. Maybe it could, who knows. But then maybe over the next couple of weeks that will happen, and that's the time people should deploy and be steadfast in the view that this is a bull market correction and not end of the bull market.
All right, guys, request you to stay on with us. We also have a slew of my colleagues from the research desk joining us to get us a sense of what are some stocks which could be on the radar for brokerages, or which have performed well in the earnings, or not so well rather as well. First up, I'll go to Tanya. Tanya, you have a list of companies with a strong set of numbers, as well as the ones which did not fare so well. What are these companies?
Well, Karunya, let me start with a strong set of numbers. The first up on my list is SAIL, which has come out with a very good set of numbers. In fact, a turnaround for the company. The top line has grown by almost 35.6 odd %, and they have reported an operating profit this time of almost 1,400 odd crores, leading to a margin of about 9.4% versus an operating loss last year. Bottom line as well, they have reported a profit of almost 43 crores versus a loss of almost 800 crores last year. So expect this stock to perform positively in trade today. Transport Corp is another one that came out with a good set of numbers. Top line up by almost 24%. EBITDA has improved by almost 40% on a year-on-year basis, and profits as well have improved by almost 65%. SKF India, once again, good set of numbers. The top line has grown by about 5%, while the margin performance has been very strong, almost 500 basis points higher on a year-on-year basis at 17.5%. Excel Crop Care, again, a strong set of numbers. The top line has grown by about 45 odd %. Profits as well have multiplied by almost 6 times. So they stand at about 12 crores, which is about 2.5 crores last year. Even the EBITDA performance has been spectacular for this particular company. CCD, that is Coffee Day Enterprises, is another thing that you need to watch out for. The top line has grown by about 26%. Margins as well remain pretty much stable on a year-on-year basis, while the profits have improved by almost 91%. So expect this stock as well to react positively. The last stock on my list is Tata Communication. If you look at it on a quarter-on-quarter basis, at the consolidated level, the top line has shown a slight degrowth of about 2.5%. However, the EBITDA as well as the margins have been very strong, and even the profits have come in at about 10 crores versus a loss last quarter.
And thanks a lot for that. Well, Tata Communication finally is getting some upgrades. There are upgrades which have kicked in Bharat Forge as well. So markets will do their bit, but there are some stocks where activity I think is going to be very, very news based. Pankaj has got details.
Right, Nikunj, as you said that Tatacom is one stock that has finally started to see some upgrades, and even Tanya was pointing out towards the strong results that they have declared. Now, if I look at Morgan Stanley, which tracks the stock pretty closely, says that after quarters of margin miss, the company has finally managed to beat street estimate. They continue to be overweight. Their target price still provides a decent sort of upside from here on. What they are saying is the good part about the numbers were that core earnings did well. The business that they have essentially did pretty well, and that's why they like these numbers. Overall, they have gone ahead and upgraded their EPS and a little bit of upgrade as far as their target price is concerned. Let's look at Bharat Forge as well. Bharat Forge was one of the key numbers yesterday. We spoke to Mr. Baba Kalyani. After that, the stock was up around 7% but brokerages continue to point out that numbers are good, but there are mixed views coming in. So on one side you have a Morgan Stanley which says that they would maintain their equal weight because of the valuations or because of the cyclicality of the business, and that's why they do not believe that such sort of numbers would continue because it's a very cyclical business. But at the same time, they're commenting the company as far as their margin performance is concerned, and there are some others who have been bull on this particular stock despite the 6% move, have increased their target price, increased their estimates by about 3 to 4%, and point out that upside on Bharat Forge is still possible. So two stocks to take note of on basis of brokerage reports. One is Bharat Forge, which was up 6% yesterday, and Tata Communication, which gave out good set of numbers. After that, brokerages have highlighted that it's a very decent performance from the company after a long time.
Right, Pankaj, thanks a lot for that. Let's take a break. Market coverage and analysis of what one should be doing in this kind of a market will continue. We'll also try and get you more market voice as we roll up the show further.